Hello, I am Emma from Paramour Forex team. I want to talk about what you need to know on Monday, February 12th. Following the previous week's indecisive action, currency markets hold steady to start the new week. The US dollar USD index moved sideways near 104.00 in the early European session after closing virtually unchanged on Friday. The economic calendar will not offer any high-tier data releases. Several Federal Reserve policymakers and Bank of England Governor Andrew Bailey will be delivering speeches later in the day. The S&P 500 climbed above 5,000 and closed the previous week at a record high of 5,026.62. Early Monday, U.S. stock index futures trade modestly lower. Meanwhile, the benchmark 10-year U.S. Treasury bond yield continues to fluctuate between 4.1% and 4.2% ahead of Tuesday's highly anticipated Consumer Price Index (CPI) data from the U.S. On Friday, the U.S. Bureau of Labor Statistics (BLS) reported that it revised the monthly CPI increase for December lower to 0.2% from 0.3%. The core CPI was unrevised at 0.3% for the same period. Tech stocks lift Nasdaq. S&P 500 sees its first-ever close above 5,000. Statistics Canada announced on Friday that net change in employment was plus 37.3K in January, and that the unemployment rate ticked down to 5.7% from 5.8%. After falling toward 1.3400, US dollar to Canadian dollar staged a rebound and closed the day flat above 1.3450. The pair continues to fluctuate in a tight range near the previous week's closing level. After rising nearly 1% on Friday, NZD/USD turned south and declined below 0.6150 in the Asian trading hours on Monday, despite hawkish comments from Reserve Bank of New Zealand (RBNZ) officials. RBNZ Deputy Governor Hawkesby said that the system can cope with high interest rates while testifying before the Finance and Expenditure Committee on Monday. At the same hearing, Governor Orr explained that they have kept the cash rate at 5.5% because inflation is still too high. U.S. dollar price today. The table below shows the percentage change of U.S. dollar, USD, against listed major currencies today. U.S. dollar was the strongest against the New Zealand dollar. Euro to U.S. dollar closed the previous week virtually unchanged and extended its sideways grind slightly below 1.0800 to start the new week. The holding pattern that Euro to US dollar has shown recently may well remain the norm in the coming weeks. US CPI will be the big highlight for the pair this week, while the Eurozone calendar's main release is Tuesday's ZW survey out of Germany. We see some modest downside risks for the dollar this week and think Euro to US dollar can find some support back above 1.0800. Although a return to the 1.0930/1.0950 area looks premature. The Euro to US dollar pair builds on last week's recovery move from the 1.0725 to 1.0720 area, or its lowest level since November 14th, and gained some positive traction for the first successive day on Monday. The momentum lifts spot prices to over a one-week peak during the early part of the European session, with bulls now looking to extend the momentum further beyond the 1.0800 mark amid a modest US dollar, USD downtick. The uncertainty over the likely timing and pace of interest rate cuts by the Federal Reserve, Fed, keeps the USD bulls on the defensive below a multi-month top touch last week. Apart from this, the underlying bullish sentiment across the global equity markets is seen as another factor undermining the safe haven buck. That said, growing acceptance that the Fed will keep interest rates higher for longer in the wake of a still resilient U.S. economy remains supportive of elevated U.S. Treasury bond yields and should act as a tailwind for the greenback. Furthermore, bets that the European Central Bank, ECB, will start cutting interest rates at the start of the second quarter might contribute to capping the shared currency and the euro to US dollar pair. This makes it prudent to wait for strong follow-through buying before confirming that spot prices have formed a near-term bottom. In the absence of any relevant macro data on Monday, speeches by FOMC members might provide some impetus, though the focus remains on the U.S. consumer inflation figures due on Tuesday. Pound sterling to US dollar continues to move up and down in a narrow channel above 1.2600 on Monday. The UK's Office for National Statistics will release labour market and inflation data on Tuesday and Wednesday respectively. The pound sterling GBP clings to gains amid improved market sentiment in Monday's European session. The pound sterling to US dollar pair is expected to remain volatile as investors await the United Kingdom employment and the United States Consumer Price Index (CPI) data on Tuesday. UK average earnings will be in focus as Bank of England, BoE, Deputy Governor Sarah Breeden said last week that the longevity of higher interest rates will be based on how price pressures and wage growth data evolve. If wage growth momentum remains strong, the BoE will need to keep interest rates elevated to combat inflation, which will actually be positive for pound sterling as higher interest rates attract more foreign capital inflows. In today's session, a speech from Bank of England Governor Andrew Bailey will be keenly watched and could set a fresh tone for March's monetary policy meeting. In the last monetary policy statement, Bailey pushed back on rate cut expectations amid low confidence that inflation will soon return to its 2% target. Following Thursday's upsurge, US dollar to Japanese yen went into a consolidation phase on Friday. Early Monday, the pair stays relatively quiet above 149.00. Gold fell nearly 0.5% on Friday as the U.S. Treasury bond yields edged higher ahead of the weekend. Nevertheless, XU/USD managed to stabilize above $2,020. Silver, XAG/USD extends its upside above the mid-$22.00s during the early European session on Monday. Traders will keep an eye on the U.S. January Consumer Price Index (CPI) on Tuesday for fresh impetus. If the CPI data confirms the declining inflation trend, it may support the case for rate cuts, which boosts the silver price. XAG/USD currently trades around $22.80, gaining 0.82% on the day. According to the 4-hour chart, the silver price resumes its bullish trend as the metal is above the key 100-period exponential moving averages (EMA). The upward momentum is supported by the Relative Strength Index (RSI), which lies above the 50 midlines. The momentum indicator indicates that further upside looks favorable. A bullish breakout above the upper boundary of Bollinger Band will see a rally to a psychological round mark and a high of January 25 at 23.00. Further north, the next hurdle is located near a high of February 2 at 23.25. The additional upside filter to watch is 23.53, a high of January 12, followed by 24.09, a high of January 2. On the downside, the 100-period EMA at 22.70 acts as an initial support level for the metal. A break below the latter will see a drop to a high of February 6 at 22.48. The next downside target is seen near the lower limit of the Bollinger Band at 22.10 and a low of January 22 at 21.92. Considering that about a quarter of central banks intend to increase their holding this year, we are confident that central bank gold demand will be strong for the foreseeable future. Central banks view that the future role of the US dollar will be diminished in the years to come will be a big driver of gold demand in the future, as has been outlined in recent surveys which show an increase in this attitude from earlier surveys. A record pace of central bank physical gold purchases and renewed investor interest to protect against purchasing power erosion. Default risks as U.S. debt grows to alarmingly high levels and sanctions risks associated with geopolitical tensions in the Middle East and Eastern Europe could all be factors that not only provide price support as they did last year, but augment any spec-driven rally. If you like such analysis, please subscribe us. Thanks and bye.